In 2022, Malaysia's trade continued to demonstrate a remarkable performance and registered commendable trade, exports, imports and trade surplus figures. This was driven by robust external demand and better commodity prices, despite tightened global supply chains and other market challenges. I am pleased to share that for 2022, the value of Malaysia's trade amounted to 2.8 trillion ringgit, surpassing the 2 trillion ringgit mark for the second consecutive year. With exports reaching 1.6 trillion ringgit, it exceeded our 12 Malaysia Plan projection for year 2025 by 24%, 3 years ahead of target. Imports, meanwhile, surpassed the 1 trillion ringgit mark for the first time, reaching nearly 1.3 trillion ringgit in 2022. For the 25th consecutive year since 1998, we have posted a trade surplus. The 2022 surplus figure is also the largest ever recorded. ASEAN, China, United States of America, the EU and Japan were Malaysia's top 5 trading partners in 2022, representing over 67% share to our total trade. These markets also contributed 68% to Malaysia's total exports last year, a new record high. On the other hand, our major import sources were from our neighbouring ASEAN countries, China, Taiwan, USA and the EU, which made up close to 69% of total imports. Significant export growth was also recorded to emerging markets, notably Togo, Djibouti, Papua New Guinea, Egypt, Afghanistan, Mozambique, Cameroon, Fiji, Maldives and Sri Lanka. I'm also pleased to share that exports to free trade agreement partners rose by 25.7% to over 1 trillion ringgit, the highest value ever recorded. Meanwhile, total exports to markets under the Regional Comprehensive Economic Partnership Agreement, which came into force last year, posted double-digit expansion led by Singapore, Japan and China. So this clearly demonstrates the importance of FTAs in growing our economic activities, trade and exports, as well as in generating employment for the benefit of our workers and people at large. Exports of manufactured, agriculture and mining sectors registered an all-time high with double-digit growth. In fact, exports and imports of manufactured goods also exceeded the 1 trillion ringgit mark, representing the largest share of 84.2% and 83.3% respectively. Electrical and electronic E&E products, petroleum products, palm oil and palm oil-based agricultural products, chemical and chemical products, as well as liquefied natural gas were the top 5 major products exported, constituting 64.5% of Malaysia's total exports. In terms of imports, E&E products, petroleum products, chemicals and chemical products, machinery, equipment and parts, as well as manufacturers of metal accounted for 62.6% share of our total imports in 2022. Moving forward, although global trade is set to hit a record $32 trillion in 2022, the outlook is rather gloomy for 2023 due to continuing geopolitical tensions, high energy prices, rising interest rates and persistent inflation. For MITI and its agencies like Martrade, what is key is how we can help our industries and enterprises navigate challenges brought about by the expected slowdown in global economy and trade, which are key in our efforts to raise the overall standard of living in the country. Those global factors are clearly beyond our control, but what we can control are policies that will, for example, help our key industries build supply chain and market resilience and develop our exporters' capacity in meeting ESG-related market demands. On this note, MITI has begun to look at all this and more to safeguard demand, enhance the supply side and ensure continuous market access, particularly for Malaysia's manufactured goods. In light of the challenging global landscape in 2023, I have requested Martrade and relevant investment promotion agencies under MITI to see how we can reinforce the business resilience of key industries from within, because this will be Malaysia's best defense against external market uncertainties and maintaining employment. Among key initiatives that MITI will continue to implement are collaborations with relevant ministries and agencies through the Jabatan Kuasa Koordinasi Ekspor or JKX. This is to ensure an and efficient coordination of export promotion programs to generate and increase demand for Malaysia's product and services in the international markets. Through Matrade's Empower Trade Association ETA initiative, we will continue to support trade promotion activities, particularly for high-value, innovative tech-based products and services, as well as ESG compliant products in new emerging markets and our FTA partner countries. I'm confident that this will enable more Malaysian companies to participate in new markets while deepening their integration in the global value chain. The more diversified our markets, the better we can manage the risk of market downturns. I'd like to make a special mention to our mid-tier companies, our MTCs, which contributed 40% to our country's GDP and employed 16% of Malaysia's workforce in 2019. Despite making up less than 2% of businesses in Malaysia, MTCs play a crucial role in developing more than 7,000 MSMEs who are involved in the MTC's ecosystem. MITI is looking at ways on how to support these MTCs better and, in doing so, further strengthen the MSMEs in the ecosystem. On a final note, I would like to assure our key stakeholders, particularly industries and exporters, that we will continue to ensure that they will gain from the various FTAs that Malaysia has ratified, including the RCEP and the CPTPP. Lower tariffs and assured market access will surely help make our exports more resilient in the face of expected market challenges in 2023. Moving forward, we will continue to monitor the global trading environment to ensure our exporters remain strong to face various trade and market issues. I'm confident that the cooperation between MITI, Matrade and industry players in executing the nation's export programs will unlock more export opportunities as well as support Malaysia's trade growth. To our trading partners out there, choose Malaysia.